Hello, everybody. I'm Derek Arden, and welcome to Monday Night Live. Tonight, we've got Justin Urquhart-Stewart. Those of you that know Justin, he's a BBC commentator on Talk Radio, and he denies he's on GB News, but he is sometimes with some of those right-wing politicians. Justin's been a friend of mine for 30 years. We used to work together in a certain bank that we never mention anymore, and we've had a great deal of fun spoofing each other. And Justin was a director of Seven Investment Management, which he sold for a lot of money, apparently. So I'm told, but I can't find that on ChatGPT. Justin, welcome. Thanks for joining us.
A pleasure.
And again, will you give us an update on the world economy, the British economy, what Rachel Reeves is doing, what Trump's up to, and the whole shooting match? Great to see you. Thanks for coming.
Great, 30 minutes, that'll be fine, no trouble at all. Hello, everybody, good to see you and hear from you again. And try not to bore you stupid over 29 minutes. It almost ends up being the same start, doesn't it? But don't panic as to what on earth's going on around the world, because you can make a list of them before you know what's happening. You're standing on the windowsill wondering whether you should jump or not. There are some pretty horrific things going on, but actually remember, anytime around the world, there always seem to be some pretty horrific things going on. By a combination of Russia, Ukraine, and what's happening in the Middle East, and of course the antics of China around the world. To that, of course, we can add an extremely important election coming up in the States, and having to deal with a rather strange government in the United Kingdom. That's strange because it's not quite sure what it's supposed to be doing at the moment. 100 days, and so far we haven't really seen much positive progress so far, but it's good to know that the Prime Minister has been able to borrow some extra clothes and get some more free tickets for football. But apart from that, who says anything about sleeves with the government's only been in for 110 days? So, the good news, the global economy, despite all the commentary from everybody, is still growing. It may look pretty dull and unimpressive, but you again, go back and forgive me if I'm repeating myself a few months back. We went through COVID, we went through the banking crisis, we went through the slump after COVID, all those issues you had to go through, and yet it is still growing. We had the central bankers, as ever, not really understanding quite what they should be doing. Not helped by some of the politicians when we had the central bank over here raising interest rates because of inflation, not caused by domestic inflation, but caused by problems particularly with cost of goods and the delivery of goods around the world, like supply lines coming through, which of course the Bank of England can't control. But no one seems to have told them that. But inflation has generally been coming down, and that's good news. Certainly not in double digits, so 2.5% UK, US going a bit lower. That's sort of roundabout where you wanted to have. And when we start seeing interest rate cuts of 0.25% and another 0.25%, doesn't make actually corporates that much difference. Actually, it does make a bit of a difference for certain governments, because one or two governments, not of course, obviously including Britain as well, had a very good idea in terms of the Treasury, whereby the unit that actually manages our government debt managed to transfer remarkably quite a lot of the debt actually into index linked. Within 6 months, of course, inflation had gone up dramatically, and therefore the cost of our debt had managed to double. Not because we were doing badly, but because they managed to go into the wrong type of debt inflation. Anyway, so it's interesting when you look at that latest figure now, we're paying for our debt. Figures always used to be around about 50 billion a year, which used to be about the same size as the defence budget. Both are going up quite dramatically, but this year it'll be over 110 billion in interest costs, which is really a very significant level indeed. But to then put something else against that, there are three big owners of UK debt. One is overseas governments and institutional investors, both domestically and overseas. So I suppose we call that three already. But the one I'm then going to mention is, of course, the government, who, of course, also has the debt. So one of the biggest issues you see every 6 months, is a dividend being written out and given by the Bank of England back to the Bank of England to actually as their payment for the debt. You couldn't make it up, could you? So you've actually got a debt on this side, you've got asset on that side. What they could do in due course is actually match the two off, but they won't do that because otherwise you'll end up with a lack of confidence in the Bank of England. So, but they'll do it gently over time. But what it does mean, though, is that when you look at their debt figures, not necessarily quite as bad as some of the headlines are like have you believe, which is no excuse to have a party, but to actually give yourself a little bit more comfort. Also, don't give an excuse for government to try and raise more money. We've heard only the past 2 weeks ago, it was 20 billion that was missing, 22 billion now, apparently 40 billion. basically how these black holes seem to get larger and larger. Basically, get distinct impression that no one has a clue. Of course, what happens is you can interpret that debt and that hole any way you like. What they will do is adjust the calculations so that they will be able to borrow more, but change the rules in terms of their treasury rules, which will mean that they can still be within their borrowing tolerances, but by putting the debt further out, by changing the terms of which the debt can be raised, i.e. for more infrastructure long-term products, which they've done before, but you can just underline that. All of that will give them a little bit more movement to be able to borrow some more money and to be able to carry on. Meantime, of course, we're going to be waiting for tax rises. And which, of course, you had from Labour said, there are the main taxes we won't put income tax up, we won't put national insurance up, and we won't put VAT up. Well, that actually accounts for about 2/3, and that's just under 2/3 of the tax take. So you're a bit stuck there. But they talk with forked tongue, because national insurance, you're right, individual national insurance won't go up, it'll be company national insurance that'll go up. Not good for companies, and just in case someone wanted to know, not good for individuals, because the companies have to pay them, and if they haven't got that much money, they're not going to be able to pay much more. So we have to wait to see what happens to this budget. Frankly, they just have to try and calm everything down, make sure people get an idea that actually Labour aren't going to be spending huge amounts of money, if only because there isn't any, but actually come up with confidence to be able to say we can actually come up with better ideas of growing the economy. And the best way governments can try and do that, apart from getting out of the way most of the time, is by actually encouraging investment, domestically and overseas, not by investing money. Governments shouldn't be investing any money, because actually governments don't have any money at all, it's ours. Actually, what they should be doing is create incentives to actually have people invest. As we've seen with the Enterprise Investment Scheme, it was pretty successful, make that more regional, and there are a lot more you can try and deal with that, and particularly into certain sectors where we know Britain's actually been doing rather well at, in certain small high-tech areas around the country. So those are things which don't actually cost the government anything at all until a proportion of those companies go bust, which they will. But by that stage, that'll be some time down the way, but hopefully you've got the economy moving by that stage just a little bit more. So it may look like doom and gloom on the headlines, but inside it all, even in the United Kingdom at the moment, if you get some sensible people looking at the numbers and looking at where they can actually try and encourage that vital word which runs any economy, confidence, then that'll be a positive issue. But of course, you can't just have confidence here. We need confidence in the rest of the world. And certainly, obviously, what happens in the States is going to be crucial. But as we head towards winter, Ukraine and the Middle East, I'm afraid, is going to be a burning sore for some time to come. How's that briefly?
That's great. Tell us about the US. Tell us about the US, and then let's go to Europe and see where Europe's.
Well, yes, I wish I was sitting in Hawaii watching that sunrise. We'd dance that better. Maybe that's the future of the American army. It's fun. It is. Sun is rising. It's not setting. There we are. More encouraging.
It is in Hawaii. It is in Hawaii. It's not in Washington, D.C. That's a big.
All right, but it's the same picture. It's just a different part of the world. No, the American economy is growing, and actually, again, despite a lot of negative attitudes, the unemployment figures have been actually really pretty impressive as well. But again, the levels of investment haven't been quite as big as expected, not high. But then again, people keep on looking at individual numbers per month. You've got to really join the dots together. And so I wouldn't be too worried about that. The stock market, particularly in key tech areas, has done very well. Inevitably, those hot stocks went off the heat quite quickly. Again, now and again, you saw then a much broader recovery overall. And that, I think, gives us a little bit more confidence. But as is always right about this time of year, certainly find it's a season of storms and not just meteorological ones. You tend to find actually it's a pretty uncertain period in the run up to Christmas, when you'll find quite a lot of volatility, as particularly the asset managers try to restructure their portfolios to actually show how well they had done to their clients, which frankly they should have done in this market. When we said over a year ago, how many people were saying, sell the lot, get out of it. Well, actually, it was a good example for most people to say, actually, don't panic. Remember, your big returns will not come from you betting on a share going up, doubling or trebling. That's called horse racing. Actually, your big return comes in the longer term compounding of the dividends coming through, and the encouragement that we have been seeing an increase in some of those dividends. So that to me is more positive. So America will have, will be delighted to get that election over one way or the other. What's it going to be like? It is, again, it's like a wonderful film. It's fantastic soap opera watching. The trouble is, it's true. So I don't know what Miss Harris is like, but doesn't always seem to fill me with great confidence. Is totally sure as what she's doing, mind you, nor was a boss. And the alternative, well, we know what the alternative is like, highly, highly unreliable. So that, I think, is going to be one of the biggest issues, is actually having confidence in leadership. The good news is the American economy, despite the lack of confidence in leadership, has been doing better. We just have to have fingers crossed that we get someone who is in the White House who we can start having a great deal of slightly improved level of confidence in than we've got now. But I think it's interesting to see, and I don't see that at the weekend, that actually Elon Musk was actually going to be happy to actually pay voters in some of the key states. I'm sure voting interference has got to be something wrong there, but nothing's dissuaded him from changing the rules for his own advantage. So let's get past that, and let's hope common sense returns, and we just allow, despite the political difficulties that we all have, that the American economy keeps going in the same direction.
Brilliant. Let's turn to our friends in Europe. Don't we have some issues at the customs coming in very shortly? We'll have to have our fingerprints just to get into Europe. What's going on with goods and inflation?
It is astonishing, isn't it? Because when we everyone said Brexit's been sorted out. Of course, it hadn't been sorted out in the slightest. To me, it still sounds absolutely astonishing. We want to be an independent trading operation on our own, but not be able to have a trade agreement with the world's largest free trading area, which is 22 miles away from our coast. And it's just madness. And so if you don't do that, you end up with endless micro discussions over how you're going to actually control little bits of paper and people's identifications and things. And all you're going to do is gum up yet again more of the transport arrangements of stuff going across the channel, through the tunnel. So it is childish in my view, but then again, British politicians never cease to amaze me with this. As for the rest of Europe is leaderless. When whatever you thought of the previous German Chancellor, and she obviously has certain embarrassment she's disappeared off now after the agreements with Russia, but nonetheless, the current one isn't exactly inspiring many people. And of course, he's got his issues over leadership coming up quite as well. So Europe is looking a bit of a mess at the moment because there is no clear leadership. That shouldn't come as a surprise. Anybody who's looked at European history over the years, it's very difficult to actually get clear leadership. We're going to end up with leadership purely coming from the Commission, i.e. from bureaucrats. Leadership by bureaucracy is never a good idea in my view. And this comes at a time when, again, Russia is still going to carry on with its some aggressive attitude. And the attitude in Europe towards Russia, in key countries like, well, see with Austria, Hungary, is not necessarily falling in line with what you would have normally thought there was the majority, which was control Russia. So I think that's going to be a very key source of difficulty within Europe. If Europe seemed to be divided and there isn't a clear leadership which direction they're going, other people will take advantage of that. And what will happen is, well, people will take their investments, particularly new companies, elsewhere, where they're not going to have that issue. So I still believe in due course that the euro will finally end. It won't be yet. It'll be a messy issue when it does occur. But it does mean at the moment that we're actually looking at Europe as a bloc. It's not a harmonious bloc. It's never going to be a harmonious bloc. I think you're going to see further divisions in the next 2 or 3 years between Euro core and Euro light. But we'll see how that plays out.
How could the euro disperse, though? I mean, I just don't see how that could happen now. You can't go back to the franc and the Deutschmark and the Greek drachma, can you?
Well, you could go from the euro to southern countries and call it zero. No, what you would do is actually you would go back to, and we've seen this before in Belgium, about 60 years ago, and South Africa about 30 years ago, where they actually then had a domestic currency as well as the external currency. So someone, say like Spain or Greece would be an obvious one to have, you'd revert to the tradable olive, and then you still maintain the Greek debt in euros. And the Germans will say you cannot write that off. You don't write it off. You just make sure that the date is never ending. It's an eternal debt, and you just therefore make sure that the debt stays there. It just never gets paid back. It could be serviced at a very low level, so it's still ticking on. So tick box. The Germans got what they wanted. Then you'll find Greece can then actually have a local currency, which is then reduced quite dramatically, say 25% in value, and their economy starts moving again. It's a fudge. Of course, it's a fudge. but the euro in its current form is not workable across that broader range of countries. Those economies are not the same, and they won't be run the same way, and they won't have the same politics. So on that basis, I'm afraid, he is going to, that sort of friction is actually going to start pulling it apart, but not immediately.
Okay. Now, what about the UK and taxation and inheritance tax, and what do you think is going to happen?
Well, I mean, who is left that they said that they are not going to tax? And the answer is, well, it looks like national insurance on companies will go in, despite the plea that no national insurance will be taxed. Will be attacked. Apart from that is, it lists companies, not individuals. So basically, it'll be a budget to encourage those people who are working, and those who are not working, those who are retired, probably actually finding themselves paying more tax. And why is that? Well, because actually, as far as many people are concerned, actually pension has done quite well over the past few years. And given the changes originally, actually Osborne brought in when his first election. So are they going to see taxes directly on pensions? No, but you see further constrictions on benefits to higher value pensioners. And there'll be things such as inheritance tax. But inheritance tax doesn't bring in a great deal of money. All you're going to do if you muck around inheritance tax is everyone's going to make much more effort to try and make sure they don't pay it. They just adjust in the meantime, and they will. It's frankly a fairly shoddy tax to try and have in the first place. What you need to do is actually try and encourage more people to be paying tax by giving them benefits later. So, for example, a higher rate taxpayer over the next 5 years could be encouraged to pay more tax on the basis that if you do so at that period of time, you will then get a benefit after that 5 years of X% off your inheritance tax or whatever tax you may be doing that time. So give them an incentive to actually participate and then get them to pay for it now, and they can get their benefit later. And in the short term, it starts meaning there's more cash coming through for the government. So there's very little imagination going on here. Also, we need to try and actually make sure our savings and investment structures are properly reformed. The London market's looking pretty old-fashioned. It always has been pretty old-fashioned. And frankly, they talk to people at the stock exchange, and they're more interested in actually managing data than they are actually managing a market. The AIM market, which grew first originally started actually up in Glasgow, sadly has lost its way and is now a complete bugger's muddle. It doesn't mean you don't need a smaller company's market, you just need it run more effectively and efficiently. And again, you need to broaden this out to encourage more liquidity to come in and making sure there's a market there which is not just domestic, but broaden it out if you can. So more international linkages to those markets, getting more liquidity crossing borders. And one of the areas I'm looking quite hard to try and see what more we could do is actually with places like Singapore, to create greater linkage there where we have common operation in terms of rule of law. And that operation, most of the financial controls are very similar as well. And great linkages to companies between the East and London. So that would be a very good way to go. You could have tried Hong Kong, but under new ownership there, so you can't do that one. So not going to be easy, I'm afraid. And I'll be interested to see if they've got positive news they can try and bring out. What they've been trying to do, of course, is depress us. And they managed to do that quite effectively by saying it's going to be tough. And what you've got to do is actually say, yes, it's going to be tough, but actually it's going to we've actually got the ability to try and make this work properly. And they needed to have been getting those messages out, not 110 days after you were elected, but in the next month after you were elected. So I'm afraid as time goes by, what's happened is they've lost more and more confidence from people saying, well, what are you doing? You're not actually seeing positive things which we can get excited about. Actually, you're managing properly. All we see at the moment is some sort of nasty slurs over sleaze issues in the market or in their private lives and things like that. And you just sit there and say, oh, God, they're just like the other lot, no change at all. So they're going to have to try and work very hard to show we're clean, legal, and decent. And we've got the imagination to actually make sure we can actually grow this economy and get more confidence back. People, I don't think, really realise just what that idiot Truss did when she had that stupid budget. It wasn't just a matter of the numbers are adding up. And of course, he's quite right. Of course, you want to grow the economy. No one wants to shrink it. What you've got to be able to do is come up with a credible plan. And just merely saying, I can do this on my own, and just look at you and say, and who are you? And what experience have you got? And without speaking to the Treasury properly, or without actually getting third-party validation, apart from one or two very strange people, it's hardly surprising. And so the cost of those debt went up. For individuals in this country who are trying to refinance their mortgages or renew them, it cost them a hell of a lot of money. That was irresponsible behaviour. And now she's just trying to deny it, saying, not my fault, dear. Yes, it was. You did it yourself.
And she's still defending herself even now, isn't she? As if she.
Oh, absolutely. Yeah, I mean, she was
good.
quite funny. I'm trying to get a collection of all the photographs of all the jobs she was in. She went through so many different jobs in Minister, and within 48 hours, there was always a picture of her in the particular dress she wore for that particular one. When she was head of the legal operations, suddenly you saw her in a wig and gown outside the High Court. When she was doing defence, and suddenly she was, good heavens, doing a Margaret Thatcher lookalike with a tank and a scarf over her helmet, and all those elements. This was a big ego thing for her. I'm afraid a pretty second-rate politician overall, who's gone from a fervent Labour supporter to a Liberal supporter to a Tory supporter to a Tory denier. So, frankly, out girl, you ain't coming back.
We better move to the Far East for a minute now, because we always talk about China and the South China Sea, don't we? Taiwan. What's your latest take on that?
Well, I mean, I'm going back out there over Christmas, well, actually just after Christmas, so sort of birthday times. And it's always encouraging to go to countries like Singapore. Okay, Singapore's a small country, the size of the Isle of Wight, but nonetheless, it's run very effectively. Now, it's a sort of democracy, as long as you realise it's a velvet glove with an iron fist inside it. But play fair with them, and the rule of law works there. So there's a lot. You can see not just in Singapore, but the countries around it, seeing significant growth, and that key growth is coming from individuals primarily, as you see the rise of the middle class, the Oriental middle class, in Indonesia and Malaysia, things like that. But as you just said, with the South China Sea and China, well, you'll seeing saber rattling going on, and that saw will continue, because remember, they managed to upset Vietnam, Philippines, obviously Taiwan, Brunei, Singapore, Malaysia. So anybody there, that's quite a list. But then who's going to stand up to China and say, we want our land back? Well, on the other hand, your gunboat, yes, you got one gunboat, we've got an entire fleet of them. Now what are you going to do? And by the way, that investment we're going to put into the Philippines, we're not going to put somewhere else. What is interesting is a theme which has been going actually about a year now. I've been watching it quite carefully, certainly seeing it in Africa, the failure of the Chinese colonialism, neo-colonialism, which was actually, how do you get in there? Well, you go in and give them money and support for big projects. You make it low-cost loans, knowing full well those low-cost loans will actually start ramping up. The cost goes up after 2 or 3 years. And lo and behold, what happens? They then default, and the ownership of that property then reverts to China. And we've seen that certainly in places like Sri Lanka, where the east coast, southeast coast port there is now owned by the port of Shanghai. It just happened to actually be the right size for most of the Indian Ocean Navy, for the Chinese Navy based in the Indian Ocean. Of course, that winds up the Indians quite a lot as well. So be wary of that one. So I'm more encouraged when we look at Southeast Asia, despite those risks. Still excellent growth to be done there. And okay, yes, you've got areas of corruption, those elements. Yes, well, welcome to developing world. That happens. Happens also in the developed world quite a lot. Also in India, again, we tend to ignore that. But bear in mind the size of this country, it's now the 5th largest economy in the world, bumping us down to number 6. Be prepared, Britain. We maybe slipped down some of the numbers, but we're still the 6th largest economy in the world. We're still the 9th largest manufacturer in the world, which I find a strange figure. I'm not quite sure what we are manufacturing, and also we're still a very significant exporter. Very easy to write off Blighty and say, oh, that was yesterday's country. Well, in terms of global power, yes, but not insignificant. So actually, time again for people to take a bit more confidence, say there are areas we're still very good at, we're respected for, and it's about time then we start actually then focusing a bit more on those areas where we can actually see them grow, make sure they've got the finance to grow, international, not just domestic, and encourage more development to come in. And that's slow, steady confidence from politicians. No magic wand, no instant rabbit out of the hat to try and do anything. Slow and steady and get this economy growing. That's what you've got to try and do. The moment people in Britain are depressed. Why? Well, the weather's awful to start with. Season of storms, we've just had our first one coming through. So they need to know that there's a firm hand here saying, it ain't perfect, no one's got all the answers, but we've got a plan, we know what we're doing. Yes, now convince us that actually this is the right way to go. People want that leadership. Anyway.
We're nearly out of time, but last question is Middle East, Gaza. Does that go into the equation?
It is. I mean, it's so desperate, isn't it? I mean, when you look at it, I was actually looking at one of the bits I had. I was seeing up in there was some bombing up on the Golan Heights. I recognised one of the areas I was doing a dig there a few years back, and it's a bit of a shame. If they'd left the bombing, they could say that they dug some mighty great holes in that place. They've probably ruined my trenches now by doing that. There's some excellent Roman excavations, but I do remember actually one morning, one of my professors, we were camped up there. One of my professors had put on a barbed wire fence opposite my tent. I put a sign up which he'd found somewhere, and it said "Danger Mines." I looked at this. Oh, that's very funny. Thank you, Professor. Very good. By the way, where do you get the sign from? What? It says "Danger Mines." Where do we get them? Oh, I'm not sure. Professor, it was there for a reason, because there are mines there. We need to try and put it better. That's beside the point. It's very sad what's happening there. There's no easy answer to it from any angle. And of course, Iran at the moment. Well, bear in mind, a lot of saber-rattling from Iran. The question is, how stable is that regime? One would like to think that it could be toppled, but they've had many years of being able to get the Revolutionary Guard at the level of strength that they could control things. And merely just having popular demonstrations probably won't be enough to do it. And are the Israelis going to bomb it in some form or other? Well, yes, they are. What are they going to be bombing? And what's the effect is? Well, I'm afraid that is something where I'm afraid we're just going to have to sit there and try and hope for some wisdom on all parties. But when you're up against fanatics, it doesn't always work very well.
Justin, that's fantastic. Now, you and I are really positive people. I hope you've stopped writing your column for the Daily Mail. That's the first thing I want to know.
Yes, I have.
Good, that's great. And the second thing is, give us your 3 positive tips for 2025.
Right. So first of all, I believe that the global economy will still be growing. So if you're worried about investing at the moment and your shares going up and down, yes, they will go up and down. But what I think we should be doing is making sure our shares are suitably defensive. And defensive, that doesn't mean just all going to government bonds and things like that. What it does mean, certainly I prefer still being in equities, but probably larger value equities, ones which have got a history of not necessarily stability, history of good corporate behavior and growth, and also paying an income. Bear in mind, the primary return from the investment stock market are the compound of those dividends over time. It may be dull, but it sort of works over time. And so just if you can get 5, 6, 7% after costs coming through, and you do that for 10 years, you think you're doing a pretty good job. If you want to have some excitement, well, that's why we have race courses. But by all means, have a punt on things. Have a punt on things with money you could afford to lose. So if you lose it, it doesn't matter. If you lose it and it does matter, don't do it in the first place. So be more defensive. I would not be taking extra risks at the moment. Property, and certainly in the UK, is showing that we had the problems of the loan policy with rates going up. They're coming down a bit now. It's going to be easing a little bit more. And so I suspect that's still going to be an area where people still want to be in. The British have a fixation over having property there. But the buy-to-let market, as far as I'm concerned, it's too complicated, too much taxation on it. I wouldn't touch it with a barge pole. So keep well out of that one. In terms of the Far East, that's still going to be a good area of growth overall. Don't try and be clever and pick stocks on that one. I'd actually use some ETFs to try and pick simple areas to actually cover the region and try and do it that way. Build up a little bit more cash. Why do you want the cash? Because there'll be some areas which we will all know as individuals that we happen to know a little bit more about, or you know someone who's a bit more of an expert in that field. And when something suddenly is out of kilter, and you look at it and you think, well, why is that wrong? Dig a bit more and find out if it's just mispriced. A lot of mispricing does occur. Bear in mind, the majority of the trades being carried on in the stock market these days do not involve humans. It's done by the computer systems. And so therefore, the computer systems will actually drag prices at speed one way or the other. And there'll be break-off points to try and stop it, the whole thing falling back. But nonetheless, you will see some of these dramatic moves. So when you see a dramatic move in maybe an index or a stock, and you've been following that, then you could use that as an opportunity to go back in. But that is a higher risk strategy, and only use that for a small amount of your money. But at least you're following then something which I find more interesting because you're using your brain, and it means you're actually being able to participate in a way and not sit there slovenly waiting for the next string to occur, which actually probably isn't that far away.
Fantastic. Justin, thanks very much for joining us yet again. I hope you'll join us in a few months' time. Tell us what you think about what's happened in America, where we're going in 2025, and comment on the budget. Could I ask members of Monday Night Live to give Justin a vote of thanks in the normal Monday Night Live way? Justin Urquhart-Stewart, thanks for joining us. And will you stay on for a little while and answer a few questions? Although I know you've got an early morning with the BBC at 5:30.
Yeah, that's a 4:30 start to get there for 5:30. Yes, not good news. Anyway, well, thank you, everybody. It's been a pleasure, and have a good New Year. Have a good Christmas, and any other celebration we can dig up in the meantime. Diwali, that's an I'll try that.